Hello, today we are solving October 2022 IAL Unit 2. First question, Sunnyside Bakeries PLC makes bakery products in ovens at its factory. The bakery products are then delivered to the company's shops before sale to the customers. So the bakery also supplies commercial premises and factories. At 30th September 2022, the following balances were available in the books of account, and they have given additional information at 30th September 2022 they have given. And finally we are supposed to calculate. Part A of the question is, prepare for the Sunnyside Bakeries PLC in accordance with International Accounting Standard IAS 1 the statement of profit or loss and other comprehensive income for the year ended 30th September 2022. Okay, so let's prepare the statement of profit and loss and other comprehensive income for the year ended 30th September 2022 for the Sunnyside Bakery PLC. Okay. Now let's write the general format. Okay, the general format for any statement of profit and loss and other comprehensive income. The first one is going to be revenue. Then you will have to calculate the cost of sales. Okay, you will have to calculate revenue minus the cost of sales. It is going to give you gross profit. Then if you have any other income, you will add it to the gross profit. And finally you will have to calculate all your expenses, and then you will get the profit and loss. Okay, gross profit plus other income minus the expenses, it is going to give you profit or loss. Okay, but in PLC, you will have to identify expenses. You will have to identify three different type of costs. First one is the distribution cost. Then you will have to identify what were the administration expenses. Okay, what is the administration expense and what were the financial costs. Okay, and in the cost of sales, okay, anything which is related to factory expense you will have to identify and put. Okay, factory expenses you will have to put. Then in the distribution is nothing but the shop. Okay, it is related to the shop cost, whatever is connected to the shop, and whatever it is connected to the delivery, you will have to identify as a distribution cost. For the administration, anything that is related to head office, okay, expense, it's come under the administration cost. And anything that's related to loan payments, okay, or interest payments, you will identify as the financial cost. Then you will calculate profit and the loss, okay, on ordinary activities before any tax was paid. Okay, this will, whatever you are calculating, this is before the tax was paid. Then if you have to pay the tax, you will subtract that amount less tax paid. Then finally you will get this profit on ordinary activities after the tax was paid. So this is how you will have to write everything. Now let's calculate for each portion. Let's see what is the cost of sales. Okay, cost of sales here. This is the working, and for each portion you will have to identify, okay, the cost incurred. First one is the cost of sales. So, and then you will also identify the distribution cost. You will have to identify the distribution cost, then administration costs, and then financial cost. Okay. Now let's see the cost of sales. Okay, cost of sales, generally we know that the cost of sales, okay, the formula will be opening inventory, okay, minus the closing inventory. So if you see your inventory at 1st October is given, and they would have given the closing inventory, and you can see that the direct materials purchased and the discount that was received is also given. So the general formula will be opening inventory, okay, plus the direct materials, okay, purchased, that was direct materials, okay, minus any discount received. We'll have to subtract less discount received, and you will have to calculate the less the closing inventory. Then you have the factory expenses. So if you see, they have factory and they have also used oven, okay, two things they are using. So you will have to calculate the expenses incurred for this, and we can see that the factory depreciation and oven depreciation will happen, okay, because you are using factory building depreciation, okay, factory building depreciation, then oven equipment depreciation, oven equipment, okay, depreciation. Okay, these are the things, and we will see any other expenses incurred, okay, any other expenses incurred. So probably factory, okay, we can see that electricity it's using, factory electricity it's using, and it is also using, there is a gas, okay. So if you go down, you can see that electricity has to be apportioned to all the departments. So one is to the factory, also it's getting apportioned. The gas expense is also getting apportioned to the factory. So there is a electricity, factory electricity and factory gas expense. So factory electricity, and then you have factory gas expense. Gas expense, okay. So apart from that, let's see if there is any other expense. First one is the auditor's fees. This is going to come under the administration expense, okay. Then you have bank current account and the bank interest. Bank current account interest is going to be other income, okay. This is expenses column, this is the income column. So bank current account interest, this can become the other income received, okay, which is going to come here. Then 6% cash is not going to come, debenture is a liability. Then delivery costs, delivery costs are going to come under the distribution, okay, delivery costs are going to come under the distribution. Then you have the direct materials, which is coming under the cost of sales. Then discount allowed, okay, discount allowed, it's going to come under the distribution cost, okay. So distribution cost, discount allowed. Then discount received, you have already put here, it's a less discount received on the direct materials purchase. Electricity, electricity is, there is a factory electricity, there is a head office electricity and shop electricity. So head office electricity is going to come under the administration expense, okay. So head office electricity, head office electricity, and then you have the shop electricity, which is used for the distribution. Okay. Then electricity we have put. Factory buildings, we have already put factory depreciation you will have to calculate. Then fuel for motor lorries expenses. Okay, fuel for motor lorries would have been used for distribution, so you will put fuel for motor lorries, okay, as a distribution cost. Then you have the gas. For the gas we don't know under which, but here it is given factory gas. Okay, factory gas we have already included here. It's going to come under the head office also, so head office expense. Okay, so head office gas expense will also appear here, and the shop's gas, okay, will appear under the distribution cost. Okay, then general reserve will not come here, it's in a financial statement. Then head office rent and expenses, so that's going to come under the administration, so head office rent and expenses. Then hire of bank card payment terminal in the shop, this is a shop, so it's coming under the distribution. Shop expenses are going to come under the distribution cost. Then interest on the bank loan and interest on the debenture, this is going to appear as a financial cost. So interest on the bank loan and interest on the debenture. Okay, then inventory, opening inventory is going to appear in the cost of sales. Then marketing is used for distribution, so marketing will appear under the distribution cost. Then motor lorries depreciation. Okay, motor lorries depreciation, it is used for distribution purpose. Okay, so we will write here motor lorries depreciation. Okay, it's not the it's going to come under the expense, is going to come under the distribution cost. Then motor lorries running expense, it is also going to come under the distribution cost. Okay, then ordinary shares will not come. Oven equipments is used in the factories. Then rent of shop premises, this is also going to appear on the distribution cost. Then you have retained earnings, it's not going to come. Revenue we have to include here. Okay, trade payables, trade receivable, wages and salaries, we don't know wages and salaries. First one is a delivery staff wage. Okay, delivery staff wage, this is going to come under the, okay, delivery staff wage is going to come under the distribution cost. So let's put it here, delivery cost, delivery staff wage. Then you have direct factory labor, that's going to come under the COS, okay, cost of sales. Then you have head office staff wages, head office salary, okay, head office salary, so that's going to come under the administration. Then shop staff salaries, it is shop staff salaries is also going to come under the distribution cost. Okay, Then corporation tax, this is the tax we are paying after calculation of the profit, so less corporation tax. Okay, we have to pay. Now let's start working on each. Okay, and we have to include the additional information also. Now first one is, there is 1 month's interest owing on the bank loan. So let's calculate here bank loan interest. Okay, bank loan interest is 27,500. So let's calculate the bank loan interest. Okay, here bank loan interest, bank loan interest, annual bank loan interest I'm going to calculate. So that is what needs to be paid irrelevant of how much you paid. Okay, so it is saying 6% of 500,000. so 6%, that is equal to 6% of 500,000, that is equal to 30,000. Okay, 30,000 is the bank loan. Okay, 30,000 needs to be paid, and but if you see that here they have paid only 2,500, which means, okay, expense, interest payable or the liability, it becomes current liability, expense. Okay, so it becomes a current liability, owed expense for interest. Okay, if you were to prepare the financial statements, then you need this. So as of now you won't need this information, but it's a knowledge. 27, okay, 27,500, so that is going to be equal to 2,500 is an owed expense, so it will appear in the current liability section. Okay, it's going to appear. Now the bank loan interest, then interest on debenture, annual interest on debenture, let's calculate that. So this is the bank loan interest. Okay, bank loan interest, let's go and put it here. It is 30,000 pounds, so 30,000. Okay, 30,000 is a bank loan interest that needs to be paid, okay, this year. Then you have the interest payment on debenture are to be made in equal installments. Okay, so they are paying in 2 equal installment, one in the March and one in September. So the September it is outstanding. They are saying let's calculate the interest, annual interest payment for debenture. Okay, for the debenture, that's going to be equal to 6.5 percentage of the loan given, 6.5% of 900,000. 6.5% of 900,000, that is going to be equal to 58,500. 58,500. Okay, now they are paying in 2 installment, one is in the end of March, okay, and one is in September. So in the March, the total interest payment is around 58. Whether they are going to pay in equal installments or 2 installments, it is 58,500. So you will have to write it here. But what will become as a owed, this is a current liability is 58,500 divided by 2. Okay, that is going to be equal to 29,250. So 29,250 is been paid. Okay, this has been paid in March. So that is what is going to be getting reflected here, but the September is outstanding. So this becomes a current liability because it's an owed expense. Okay, owed expense and is a current liability. Okay, you need to pay within this year. Okay, that is what it shows. So the 29 to 50 will become owed expense. So now this is a financial, okay, financial cost. So let's calculate these two, okay, because there is no other financial cost. So let's calculate the total financial cost. So 30,000 plus 58,500, that's going to be equal to 88,500. Okay, 88,500 is the financial cost, and you can go and fill it up here. Okay, financial cost, which is 58,500, 88,500 pounds. The next one is, okay, here let's calculate the cost. Then what is the additional information we were here? Electricity is to be apportioned. So factory, it is 30 percentage of, let's calculate the electricity, okay, for the factory given here. It says 30 percentage of the amount given for electricity. Amount given for electricity is 212,000. So that is going to be equal to, so 30 percentage of 212, it is 63,600. 63,600. Then they have given electricity head office 30 percentage. Okay, again it is 30 percentage of 212 for the head office electricity expense. So let's write it here. The same, so 30%, so it is going to be equal to 63,600. Okay, so the head office also has its electricity expense, it is 63,600, and shop, it is 20 percentage of 212. For the shop electricity, it is 20 percentage of 212,000. So that is going to be shop electricity. Shop electricity is 40 percentage of 212. So that is going to be equal to 84,800. So 84,800. Okay, shop electricity. Then you have the factory buildings are being depreciated over 50-year life using the straight line method. 10 years depreciation has already been calculated up to date, it's over. Now the depreciation for the present year needs to be calculated and entered into the books. So which means for the remaining 40 years you have to calculate the depreciation and you have to maintain in the books. Okay, so now he has said that this is the carrying value. So carrying value, so let's calculate here factory building depreciation. That is going to be equal to, so the carrying value is this much, 56,800, 56,680,000, 5,680,000. Okay, for the remaining 40 years, that's going to be equal to, so that is equal to 142,000. So that is 142,000. So this is the factory depreciation. Okay, factory depreciation is 142,000. So let's write it here. It's the cost. So 142,000. Then you have the additional information. An invoice for the fuel for motor lorries 21,000 had not been entered into the books. So the fuel for motor lorries, we can see that the fuel for motor lorries, okay, it's F, it's appearing in the fuel, it should appear in the motor lorries or it should appear in the fuel for motor lorries. Yeah, it is 124,000 plus 24,000. It's still owing and it has not been entered in the books. Fuel lorries will appear in the fuel for motor lorries will appear in the distribution. So go and write it here. So 124,000 plus 21,000. So that value is going to be equal to 145,000. So it is 145,000. Okay. So that's the information they have given. Then factory gas has to be apportioned. Factory is at 75%. Okay, 75% of the total cost is 820,000. So that much you have to include as an expense in the factory. So 75% of 820,000. So that is going to be equal to 75% of 820,000. So that is going to be equal to 615,000. So 615,000. Okay. Then it says head office, it is 5% of, in the head office also they are using the gas. So that is going to be 5% of 820,000 of the total expenses. So that is going to be equal to 41,000. Then you have shops, it is 20% of 820,000 for the shop. Okay, the shop gas is being used, it is 20% of 820,000. So that is going to be equal to 164,000. Then it says in closing inventory we have it to include 89,000. So closing inventory opening, and this is less the closing inventory. Okay, less closing inventory which is at 89,000. Then you have marketing paid in advance. 32,000 was paid advance. So but only this year's marketing expenses has to be included. So 324,000 minus 32,000. So marketing, okay, it was included here in the distribution, minus 32,000. So the remaining, okay, which was expense paid in advance becomes an other, it will come under the other receivables. Okay. So it is 292,000 alone you have to include. Okay, it is another receivables. So it is a current asset, it expense paid. So it is the extra 32,000 becomes current asset. So then this one will be equal to 292,000. Okay, alone has to be included as a marketing expense. Then it says that The motor lorries are to be depreciated over 8-year life with a nil residual value using the straight line method. Depreciation for this year is yet to be entered into the books. Now let's calculate the motor lorry depreciation. Okay, motor lorry depreciation using straight line method for 8 years. So the cost divided by 8-year lifetime. Okay, so the motor lorries, we can see here the cost is 385,000 divided by 8, that is going to be equal to 48125. Okay, 48125. And this year depreciation for the motor lorries they have not included, so let's include this. So motor lorries depreciation was not included, so that is going to be equal to 48125. So 48125. Okay, then it says that the oven equipment is to be depreciated at the rate of 25% per year using the reducing balance method. Depreciation for this year is yet to be entered into the books. For the oven equipment, okay, for the oven equipment, let's calculate the depreciation. It's cost minus the depreciation times the rate. Okay, so the cost minus the depreciation times the rate for the oven equipment. So that is going to be equal to, the cost is 1,800,000, okay, minus 420,000 times the rate. So times the rate they have given is 25%. So that value is going to be equal to 1,380,000 times 25%, that is going to be equal to 345,000. So now let's write it here for the this is the oven equipment. Okay, oven equipment depreciation. So using the reducing balance method, it is 345,000. Okay, 345,000. Then wages and salaries. Delivery staff, it is 525,000. Delivery staff wages here they have given. Okay, so it is 525,000. Okay, then shop staff wages, it is 610,000. So let's include it here. So 610,000. Then you have the direct factory labor wage, it is 1760, okay, 1000. And then you have head office, it is 984,000. Head office salaries, it is 984,000. So these are the additional information we have accounted. Now we have to include the other stuff from here. First one is, okay, so here we can see, let's calculate the cost of sales. Opening inventory plus the direct materials. Okay, opening inventory plus the direct materials minus this closing. Okay, so opening inventory cost. Okay, opening inventory, we saw that it is 82,000. So opening inventory is 82,000. So let's write it here. direct materials, okay, direct materials, it is 2,650,000 to 650,000. Then less discount received, it is 21,000. So less 21,000. Then less the closing inventory. Then you have the other costs. So let's calculate, okay, let's calculate the factory direct labor wage, factory gas, okay, everything we have included, other stuff. So now let's calculate the total cost of sales. So the total cost of sales is equal to 82,000 plus 2,650,000 minus 21,000 minus 89,000, okay, plus 142,000 plus 345,000 plus 63,600 plus 615,000 plus 1,760,000. So that is 5, okay, it is 5,547,600. This is going to be your cost of sales. So let's go and put it here. Okay, cost of sales, it is around this much, and we have to subtract, okay, less revenue minus, okay, we have to do less the cost of sales. So I'm going to put it in the brackets. Okay, then you have, let's calculate the distribution cost. First one is the delivery cost, it is 211,000. So 211,000. Then discount allowed, it was 43,000. Shop electricity we have put. Then the rest, then hire of the bank card payment terminals, so that is 96,000. Then you have motor lorry running expenses, so it is around 82,000. And then you have the rent on the shop premises, it is 380,000. Okay, other things we have included because there was additional information and stuff given. So we have to add up and find out what is the total distribution cost. Okay, let's calculate the total distribution cost. So that's going to be equal to so first 211,000, okay, plus 43,000 plus 84,800 plus 145,000, okay, plus 164,000 plus 96,000 plus 292,000 plus 48,125 plus 82,000 plus 380,000 plus 525,000 plus 610,000. So that is 2680925. Okay, 2680925. So 2680925 is your distribution cost. So let's go and write it here. Distribution cost is this much. Then let's calculate the administration expenses. So the first one is the auditor's fees. It is 26,500. So let's write it here, 26,500. Okay. Then head office electricity is gas and electricity has been calculated. Head office rent and expenses, it is 480,000. So let's include that. So 480,000, and you have the salaries. Now let's calculate. Okay, now let's calculate the total administration expense. So the total administration expense is 26,500 plus 63,600 plus 41,000 plus 480,000 plus 984,000. So that is equal to 1,595,100. So 1,595,100. Okay. So now let's go and write the administration expenses here. Okay. So these are the total expenses. So now let's fill up the revenue. The revenue here we had seen here, it is this much. So let's write it, the revenue, it is 10804,740. So 10804, okay, 10804,740 is your revenue. Okay, now the revenue is this much less the cost of sales. So let's do this. So 10804,740 minus 5547,600. So that is 5. Okay, that is 5. We have to write the gross profit value. 5,257,140 will be your gross profit. So let's write up here